Hello, and welcome to another one of my chart lessons. My name is Oliver Velez, and today we're going to actually talk about coffee. Now, as I'm sure you realize, coffee is a very popular commodity in a lot of people's lives. It also happens to be one of the most popular commodities in the trading arena. Coffee is focused on so intently that if it rains in Brazil, the speculators who look at coffee look for trading opportunities. But coffee, as you can see by the daily chart I have posted here, has really, as of late, been sort of in a downward negative state. All right, after sort of topping out here in the latter part of the year, the latter part of last year, coffee hasn't really done much but wind itself to the downside. What I'm actually seeing now are very interesting signs of support and very interesting signs of accumulation happening. Where do I see those signs occurring? First of all, they occurred in a very solid fashion down in this 130 point range area. And what you're looking at are several bars that suggest that buyers are stepping up to begin their accumulation phase of this commodity. The frequent occurrence of bottoming tails at the lower parts of red bars typically indicate that on pushes to the downside, all right, buyers are coming in and looking at that downward move not as an excuse to step to the sidelines, not as an event that causes concern, but as a gift, as an opportunity to pick up value. These bottoming tail-like occurrences did not occur throughout the entire drop to the downside. Notice that after sharp drops, there were no tails near the bottom here. Rally, drops, no tails, no tails, okay? But now we're getting drops and tails forming. Drops and a tail forms. Drop and a tail forms. Whenever you start to increase, whenever a chart or an item starts to increase the frequency of bottoming tails, meaning they don't come once in a while, but they start to come frequently and rather close together. These are the very almost hidden subtle signs that institutions have begun to go to work at accumulating the underlying security. All right, now, another thing I'd like to point out to you is how to judge whether or not a downward trend is starting to weaken. We can do this in several ways. But here's one very key important way. I want you to look at this low that was formed in the beginning of the year. This low. All right? Now, look at the next low that was formed. Look at the distance. As a matter of fact, let me take a line and show you. Now, do you see the distance? There's a distance that is very interesting here. That is quite different from the distance and space of the next lower low. And then the next low is actually almost identical. And then the next low is actually higher. Now, if you can actually visually, now you know what? Wait a minute. Let's grab this low. So you have initially every low was was decently lower than the prior low. You also had a widening of the lows, meaning that this low in the beginning of February was far away from the former low. And then all of a sudden, the space between the lows gets shallower and shallower, and then they actually become higher. The market speaks a language, and what we as astute speculators and traders need to be able to do is to read the language that the market speaks. And the language is primarily made up of the same letters, the same events, the same occurrences over and over and over again. All right? What I'm looking for is for several things. Now that we've had this rounding out, and now that we're starting to see these signs of institutional accumulation, demand coming in by the frequency of the bottoming tails, now that we're also, after seeing this, are seeing strong green bars develop, right? It's potentially time to look for a long opportunity in coffee. Now, I want to bring, once and for all, I want to bring your attention to this long, elongated red elephant bar. I call these bars elephant bars. Very negative. Until this negative bar has been completely neutralized, I will not act. One key, very useful concept is to always, if you're thinking about buying, always look to the left in your chart and find the most recent bearish bar, the biggest, most recent bearish bar. And a great concept is to require the stock to take out the high of the most recent, most bearish bar. And so until the high of this giant bear footprint, until coffee can take out the high, which means that until coffee can neutralize and completely reverse its most negative recent bar, then we'll sit on the sidelines and continue to watch. So a move above this key area would indicate a strong enough sign that the bottoming signs that we have been seeing over the last several weeks are true and are powerful enough to sort of have a nice upward move in coffee. Now, I will actually be playing coffee via the futures market. However, those who want to play coffee in the equity market can do so with the symbol JO, Joe. That is the ETF for coffee. That ETF attempts to mirror the futures contract as best as it possibly can. This is Oliver Velez coming to you with another chart lesson that I hope you've enjoyed.